All right, folks, Nvidia. You watching Nvidia? It continues this sort of almost stealthy move at this point. Now, this morning, it got a boost from Morgan Stanley, which it says it expects Blackwell production to reach 450,000 chips. Know what that means? That's $10 billion. This is the fourth quarter. Obviously, that's great news and good news for my next guest. I'm going to bring in Gabelli, Belton. John, welcome to the show.
Thanks for having me.
You've got a lot of Nvidia, right? This is one of your favorite ideas right now.
Yeah, one of our biggest positions in all of our growth funds at Gabelli.
The narrative over the Wall Street narrative has been the play is over. Not necessarily, we see the orders. Obviously, the orders are mind-boggling, but that this is sort of a toppy-ish kind of thing. It can't last forever. The stock is ahead of itself. How much of that concerns you?
Well, let's just go back to what CEO Jensen Huang said this week on CNBC. He said the demand for their chips right now is insane.
Insane.
It's a pretty strong word.
Yeah, yeah. Well, I never heard of that network you're talking about, but I did hear the word insane before in a commercial. I had fun with this. Before you were born, there was this retail outlet called Crazy Eddie,
yep.
And the guy used to come on TV and say, our prices are insane. Then they went out of business. It was a scam and everything. So
I think it's a different kind of insane he's talking about here.
Okay. Is he laying it on too thick?
Well, I mean, we can talk about Nvidia. I think we're still early innings in the AI. I think AI is a technology that's going to have very deep and long-lasting impacts for many years, and Nvidia is going to be one of the prime beneficiaries of that. But I think stepping back, I was watching one of your earlier guests talk about the Magnificent Seven, talking about being kind of long in the tooth in that rally. Right. I think I would actually defend a lot of those stocks. I think Nvidia included. And maybe let's remove Tesla from the conversation. We can call it the six-pack.
Right.
These are companies with really strong revenue growth, strong margins, still expanding margins, good shareholder-friendly capital allocation policies. And year to date, I think they've generated more of the index's earnings growth than they have the index's performance. So I think the fundamentals really do justify the stock performance year to date for these stocks.
By the way, I agree with you. I think it's amazing. Everyone's saying, oh, the 493 are going to have pretty strong earnings growth at the end of the year, and still the Mag 7 will probably enjoy better growth at much higher, a much more complicated.
Well, and I think you could also say earnings expectations. The Mag 7 have been over-delivering on expectations. The S&P 493 has actually missed expectations versus the start of the year.
Right. Let's move to other areas here, because I was intrigued by the fact that you do see some attractive names in healthcare.
Yeah, well, I think
I mean, outside of the miracle weight loss drugs, it feels like there's no one else. There's no other story or narratives going on there.
Well, we do like the healthcare sector, and I think that's probably starts from our assessment that we are not quite in the soft landing camp. I'd put ourselves in more of the bumpy landing camp. The scene in the movie Airplane comes to mind when they're trying to land the plane and they do so safely, but it's not exactly pretty.
Right.
But so I think healthcare is a sector that we like the defensive attributes of the sector as a starting point. And then within healthcare, we have a couple names in medical technology we like, Boston Scientific being one of them. Boston Scientific is a company that has really structurally accelerated its revenue growth.
Right.
It's got a really strong portfolio of market-leading franchises across a bunch of different medical surgery end markets. And nearer term, they've got this cardiovascular business that has a lot of product cycle tailwinds, including this new catheter that they got FDA approval for earlier this year that's being used in pulse field cardiac ablation procedures to treat patients with atrial fibrillation, which is a very large market.
Yeah.
And they're really kind of creating this market, a lot of growth. I think that's going to do a lot for their business over the coming years.
Yeah, they always were sort of a pioneer. They got over the skis for a long time. If you ever get a chance, maybe you have already, read the story of how the two founders met each other. Real quick, less than 30 seconds.
Homework, okay, I'll do that.
I do that occasionally. GE Aerospace is also a name you like.
Yeah, GE, I think it's a aerospace and defense sector. We really like the sector. Secular growth behind the sector. I think commercial travel is an area that has outpaced GDP for the last 40 years.
You would look at Boeing on something like this, though.
Well, I think what's happening with Boeing is really helping GE's business, because what's happening with Boeing is they're having a lot of production delays and production halts. Airbus is too. That's creating a lot of demand for the aftermarket, which is the strongest part of GE's business. It's about 70% of their revenues, very high profit margins there. So as Boeing production gets halted and slows down, which is something we think is going to happen for a couple of years, helps GE's profit margins.
All right, great. You gave us a lot of great information, and you referenced Airplane. You're all right with me, my man.
It's a great movie.
It is. Thanks a lot.